A very good afternoon to everyone, to all the investors and the entire management team who has joined us. So without wasting much time, I'll hand it over to George Alexander Muthoot for opening remarks, and then we can follow this with a Q&A. So over to you, sir.
Okay. Thank you, and good afternoon to all. This is George Alexander Muthoot, Managing Director. I have with me our CFO, Mr. Umantri Maman, and also our Chief General Manager, Mr. K.R. Bijimon, and Ms. Shanti, our Finance Manager, AGM Finance. We also have two Executive Directors, Mr. George M. Alexander Jr., as well as Epan Alexander. So, George Alexander Jr. and Mr. Bijimon is on the board of some of the subsidiary companies. Epan Alexander oversees the home finance company. So, putting that in context, I think we can start. So, I'm sure you have the financial reports also with you. It is good that our total assets under management has reached 32,154 crores, which is certainly our highest number, and also our consolidated profit of 1,784. Both these two are really landmark figures which we were able to reach. Along with this, last time we had decided, or the board has decided, that the other business, subsidiary businesses, should constitute a significant proportion of the total business. So previous year, it was 5% of our total business. Last year, we have been able to increase it to 10%. Going forward, next year or this current end of this current year, we would like to bring it to 15% of our consolidated AUM, and by year after that, by 2020, we would like to reach it to 20%. We are certainly on track because of that, because the subsidiaries, although with a low base, have been doing good business. And as far as the gold loan business, our primary business, core business is concerned, we had not seen very good traction last year due to various factors. But this quarter, in the last 1.5 months, we have seen good traction on this front, and we expect, or we would like to reach a 15% growth in the gold loan book for the current year. Along with that, the subsidiaries, which is the home finance, as we have already informed you, it has got 1,400 crores of AUM now. We hope that, rather we are targeted for a 2,500 crores of AUM by the end of the year. Same with the microfinance, where we have 1,100 crores and 1,190 crores. We would like to reach it to 1,900 to approximately 1,900 crores by next year. The other subsidiary, which is the insurance subsidiary, is also doing well. Actually, it has brought in a net profit of 10 crores, and we are doing good business with many insurance companies, and we should be considered as one of the top 5 insurance brokers in the country. The Sri Lankan business is flat, definitely, certainly because there is some uncertainty there with regard to the political situation also. The Prime Minister, governors of Reserve Bank, etc., keep changing there also. But they have also reported profit. But last year, year before last, where they reported a 27 crore profit, this year they had reported a 20 crore profit. But considering the fact that when we took over the company 4 years back, it was making losses. So it is definitely good that we are diversifying into Sri Lanka also. There also they have some better plans for next year and also to bring up the AUMs as well as the profit to 27 crores next year. Both are in Sri Lankan rupees. The management is also considering to enter into vehicle finance business as well as into personal loans. Very, very calibrated steps we would be taking. Nothing very, no big acquisition or things like that, but going slow but steady. We are looking out for good people and good areas to start both these businesses. And we will be, by next 2-3 quarters, we will be able to see some numbers of that also in the consolidated balance sheet. But it will be a slow process, a very calculated and calibrated progress on that front. Here, otherwise, the profit, etc., has been quite good for the company. It was mainly because our interest collections and processes we had set in last 3, 4, 5 quarters with regard to collection and servicing of interest, as well as servicing of loans and renewals, etc., are showing its impact, its positive impact, and that is one of the reasons for increase in the interest earned. And something which also helped us was the cost of borrowing, which also gave us good benefit. So both these were one of the two important things which we have had helped us. Along with that, we have also the company, Muthoot Finance and Muthoot Group has also are also bringing in Amitabh Bachchan as a brand ambassador, and the contract is for the next 2 years. It is extendable if necessary. And also with the South Focus company, earlier we had sponsored we were the main sponsors for Delhi Daredevils, which was in 2010 to 2014. After that, we took a break, and this year we are the principal sponsor for Chennai Super Kings, and fortunately, it is doing well also in the games. It is already qualified. Both these, we have just started the association, and I'm sure going forward, we will be able to capitalize on these two associations to bring in more footfalls and business into the company, not only in the gold loan business, but also in the other verticals and subsidiaries. So these are the positive things. And another thing which is always a concern, definitely, for the investing public is about our non-performing assets. I would like to dwell in a little length on this non-performing assets. See, non-performing assets in gold loan business actually should be seen differently from that of NPAs of banks and financial institutions. Gold loans, are collateralized by household gold ornaments, these are easily saleable, and it can be treated as good as cash. While in the process of liquidation, we generally do not incur any loss on the principal amount of loan, and we are able to recover most portion of the interest receivable. Even otherwise, from our past experience, borrowers actually do not abandon these ornaments just because we are treating it as an NPA in our books or a receivable value is more than the current price. Because it's a personal jewelry, borrowers try to recover these ornaments provided we give them more time. We give more time to the borrowers provided there is adequate security in the value. In most cases, borrowers repay the loans and retrieve the ornaments. Hence, providing more time, another 2-3 months, is good for the company as it protects the customer's interest as well as enables the company to earn more interest. The residual portion which is not repaid by borrowers only gets auctioned off. Again, unlike NPS of banks or financial institutions, in gold loan business, NPA bucket is actually a dynamic one. In the case of NPS of banks or financial institutions, NPA account continues for several quarters as liquidation of the collateral takes time and realization. Hello? Digan?
Yes, sir, we can hear you.
There was some disturbance. Is it okay now?
Yes, we can hear you, sir.
Okay. So, unlike that of banks and financial institutions, gold loan business NPA bucket is dynamic one. In a bank, etc., the account continues for several quarters because liquidation of the collateral takes time and realizability of full loan is doubtful. However, actually in a gold loan, NPA arising in a quarter mostly gets recovered in the subsequent quarter through borrower repayment. As we are speaking, more than 30% of whatever NPA you have seen in the books has already gone out of our books. So 30% of it is already moved from our books. The new ones only will come. The same thing last quarter also. Whatever last quarter you saw, it is not the same accounts which you are seeing this quarter. So the NPA which was 1,589 in Q3 became 2,032 in this quarter. In this regard, we would like to clarify the following. There are two changes in the NPA classification process followed by the company from the previous quarter. First, we moved to the 3 months recognition, now from 4 months. The NPA we would like to call as these NPAs actually we would like to call as primary NPA. Second, we started recognizing the standard loans of a primary NPA borrower as NPA as required by RBI. The RBI norms say that this NPA we would like to call as secondary NPA. So primary NPA which was 1,589 in Q3 actually came down to 1,291 in this quarter. That is from 5.62 it came down to 4.43. However, due to the secondary NPA which the borrower-wise classification as mentioned above, another 742 crores, that is 255, also got classified as NPA. The impact of the movement from 120 days to 90 days in the primary NPA is about 400 crores. Again, the LTA of the primary gold loan receivable which we saw or which we see is only 94%. That means the principal plus interest, if you add together, it is coming to only 94% of the value. So we don't lose practically anything in that. On the secondary NPA, which is classified just because it is a same borrower, the same stands at 76% only. That's because many of these accounts are just 1 month and 2 months. Just because the borrower had an old loan, it has now become an NPA. Actually, this is just a 1 month NPA. Further, out of the primary NPA, 1,291, 799 crores is from 6 months scheme, which became NPA at the end of 9 months, and the normal NPA scheme of 12 months, which becomes NPA at the end of 15 months. So, actually, we could have got rid of these NPAs by forced to follow up with borrowers or through auctions. However, this will annoy the customers and affect the company's goodwill also, especially since there is adequate security value. Hence, we have taken a prudent view to classify these accounts as NPA as per RBI norms and collect the dues at a later date. We do not expect any principal loss in these accounts, and we will be able to recover most of the interest also from these borrowers. As we stand today, as I said earlier, of the 2062, the amount today standing is only less than 1,600 crores. I would like to add something here. See, just because an account has become an NPA, we have never had an occasion to write off any rupee, 1 rupee as loan losses. Whatever loan losses we see in the books, whether it was 32 crores this year, it was 19 crores last year, 10 crores year before last, is only because of some spurious gold coming, some fraud happening in the branch, and generally because of theft or burglary which has happened. This year, the 31 crores, more than 25 crores is due to the 2 burglaries which happened in North India. Company paid back all the borrowers their money, and that is what is debited as an expense. Of course, these are all insured, but as you all know, it takes long time for us to get the claim from the insurance company. So we did not wait for the claim to come. We paid it from the company. Probably after 1 year, 2 years, 3 years, 4 years, we we will get or we may get the claim from the insurance company. So, what I want to add here is, NPA actually does not result in a loan loss to the company. As a company, prudent company, from our years and decades of experience, this is what we would like to add here. So, to sum it up, it should be, one is that providing additional time for NPA account are safe and earns the company good interest. Second, there is always a constant churn within the NPA portfolio and they get redeemed quickly. The two changes in the NPA classification amount, which is the 90-day classification and also recognizing the secondary standard loans of some borrowers as NPA, has resulted in this high NPA. The primary NPA, as I said, has reduced from 5.63% to 4.43% in spite of the 90-day recognition. And 729 crores are from the 6-month loan. So, in short, what I would like to add from our experience over the so many decades of this, we have never had loan losses just because we give more time to the borrower. Please also understand something. There are few other companies also doing the same business. They also almost have maybe 90%, 80% of our number of branches. And they are almost just adjacent to our branch, competitors. But because of their, if any of them is following non-customer friendly practice like quick auctions or forcing customers to getting them to repay, not being considerate to them, not giving more time to them, people try to keep away from them. That is demonstrated in the fact that although all these companies have their branches left, right and center of Muthoot, our business is almost 2.5 times each one of their business. Why? Customers still prefer to come to Muthoot because of our good customer practices. And these customer practices has helped us to bring the business to where it is. And secondly, we have never had a loss just because we were considerate to the customer. So this is what I would like to say about the NPA. NPA for gold loan companies should not be equated with that of a bank or a financial institution's NPA. We don't have any Modi or such people in our accounts. Ours is all small, good borrowers who have kept their gold with us. We don't have any such accounts with us. So that is what I would like to reassure the business. So we are on good track. We expect a 15% increase in the gold loan portfolio, and certainly the other businesses also, though very small base. With the small base, we would be able to do a 50 to 60% increase in the subsidiaries. So we see good days ahead. The interest rates from banks may go up, but I'm sure we will be able to overcome that also. To that extent, we were successful in mobilizing 3,000 crores of NCD, and thanks to all our investors, our well-wishers, we were able to do the 3,000 crores of fundraise in 1 day's time. That definitely shows the support which you all also giving to Muthoot, and please continue with that. So I thank you now for a patient hearing and certainly take questions from you. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Anand Bhavnani from Samiksha Capital. Please go ahead.
Thank you for the opportunity. Sir, this secondary NPA that we are demonstrated in the PPT, this requirement from RBI is from which particular quarter? Is it recent requirement?
No, the regulations were there. It's not a recent amendment. We had omitted that part of the regulations. It's actually, it was a mistake on our part. We noticed it, so we classified it now.
Okay, sir. And sir, you mentioned that 1291 crores is the primary NPA, and out of it, 400 crores is due to shifting to 90-day norm. So if I were to do a comparison like for like with last year, our NPA should be 891 crore primary NPA. Would that be the right way to think?
Yes.
Okay. And sir, of all the NPAs that have been reported, how much interest income that we have already recognized on these?
So for NPAs, we totally de-recognize the interest accrued.
Okay. And sir, one last question. In terms of auction, if we value, let's say, 100 worth of jewelry, what is the total cost of auction due to the auction process as well as due to poor quality of jewelry which we might not have realized at the beginning?
No,
what is the typical percentage?
Finished? The cost of auctions is actually negligible. It's negligible.
And sir, any losses due to jewelry being of lower impurity or not being...
That is just marginal. So you can't expect everybody to give you the same quality of jewelry. Some may be little better quality, some may be little lesser quality, but generally it is good quality because our auditors have already checked and certified.
Okay. So sir, the percentage-wise it would be...
issue for us.
Yeah, percentage-wise it would be less than 3-4%. Would that be the right way to think?
That's not, you can't put a percentage to it. Maybe 3-4%, probably yes.
Okay. And sir, lastly, the 6-month product that we had and we are planning to unwind, how much of the NPA still comes from the 6-month product?
It's 728 crores.
This will be the primary plus the secondary?
Primary.
Okay, so primary 728 crores is from the 6 months. Okay, thank you sir, I'll come back in the queue.
Thank you. The next question is from the line of Christine Rowley from Sloan Robinson. Please go ahead.
Thank you very much. Thank you. Thank you very much for the call and the careful explanation both on the consolidated growth prospects for the company and on the changes in the NPAs this quarter. I wanted to just ask about the 15% guidance on the loan growth in the current fiscal. The last few years, the loan growth on the core business has been a little bit slower than perhaps the company had expected in the kind of mid-single digits in fiscal 15, fiscal 16, and again in the fiscal which just closed. How confident are you in the 15% growth outlook for the current fiscal? It would be difficult to kind of have to revise down that guidance later on in the current fiscal, and I'm just surprised about the guidance in the context of what was achieved in fiscal 18 and the kind of trend rate over the last 2 or 3 years, which has been slower than 15%.
Yeah, of course. We always have to be optimistic about growth. We are optimistic 2 or 3 things which are working better in the last 1 or 3 or 4 months is that things are starting to pick up. Dependent is also picking up. We see growth in many of the regions. Of course, we have taken some steps in the marketing side also. As I said, we have brought in the brand ambassadors, we have brought in the Chennai Super Kings, and we feel that we will be able to maybe give more traction to this at the branch level and also the staff confidence level, etc. We see some of these things happening now. That is what gives us the confidence to say about 15%. I think we should be reasonably be able to do it. More than that, I wouldn't be able to say anything.
And, you know, one of the advantages for you of being a kind of later reporter in terms of your quarterly numbers, revealing those on the 16th of May, do you see any change in activity on the ground in the first 6 weeks of the current quarter?
Yeah, that's what I said. Not only the 6 weeks, probably in the last month of last year also has been good.
So it picked up starting from March 18.
Yeah, I think the demand has picked up in the month of April until now, May, and I'm sure that we will be able to deliver something like 15% without fail.
Okay, that's a really important change and an important comment for the company in the light of the execution over the last 3 or 4 years. So I appreciate the clarification on that. Thank you. That addresses my question.
I think we can take next question. Hello?
Hello.
Sure. We'll take the next question. The next question is from Shiv Kumar from Unifi Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, we just wanted to understand as to how much of that gold loan growth of 15% that you're projecting is coming from new products which we have recently launched, like that business loan about 10 lakhs, right, at the lower interest rate which you had launched last year. So how was the experience and what is the traction you're seeing in such new product launches?
See, the new products, we generally do one product maybe once in every 2 quarters, etc. These give more variety of loans or options to the customers. See, each one of them has its own time to maybe get better traction. So even the 12% loan which we have given is showing good traction, reasonable traction. It will take a few more quarters for it to show real growth. But every product, every scheme, I don't want to say product, every scheme has its own growth potential and its own different types of people who want it. If it is the big loans, it is for the bigger customers. The smaller loans are for the usual customers, for maybe some other traders, etc. Some other will be there. So we have different products for different schemes for different customers, and all of them reasonably work well.
What is the absolute AUM you have, sir, from that particular product, this business loan for big ticket sizes, about 10 lakhs?
No, we can come back to you later on that.
Okay. Sir, and one more question on the NPA part. You said that this number is kind of dynamic, and as we speak, it has come down from that 2033 levels to around 1600 levels. Is that right?
Yeah, correct.
And going forward, that now we're carrying about 730 crores from that 6 months loan, and obviously you have given them a long period of time to resolve it. So going forward, as you wind it down, can we expect this GNPA to further come down from the 1600 levels which we are carrying as on date?
I think we should do better in the first quarter. I think certainly by the second quarter we should be able to bring it to a reasonable level.
Can you clarify, sir, as to any ratios you're working towards?
Yeah. See, if you're asking whether of this 1,600, most of it, 90% of it, will get resolved in the next quarter itself. The new ones will start coming by the next quarter. That's it. That's what we meant by dynamic. What you see now will get resolved in the 3-4 months. By next quarter, another set will come.
Yeah, I agree. But yeah, in terms of percentage, sir, any numbers you can share as to where you're working towards? So obviously the 6 months one will wind down, right? That product is entirely stopped. So that should at least bring down the percentage.
At the end of the day, company is not incurring a loss or there is not a significant risk. So we have not freezed any particular number, but we are able to manage it. If you see last so many quarters, we have been able to manage our NPA even though it has increased. So to specifically answer your question, we are not fixing any particular percentage. but we'll try to bring it to the market expectations.
Right. Sir, and one question on the recent board resolution to raise the 6,000 crores through the NCD route. So are you trying to, because you recently raised 3,000 crores in April, so are you trying to bring down the bank loan exposure? So what is the strategy going forward in terms of borrowing mix? And why are we doing this now when the bond yields are slightly spiking up over the last, which has spiked up over the last 2-3 months?
No, there are specific filing requirements with ROCs and all with respect to public issue debentures. So that's the reason why we have taken this resolution for 6,000 crores. Does it mean that we are going to raise it immediately? No, probably we can do it in various tranches.
Right. Thank you, sir.
Thank you. Next question is from Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. I just wanted to know what, proportion of borrowings is still, legacy borrowings which would come up for repricing maybe within this 1 year?
Probably, I need to check on that number. I think, the current quarter, the borrowing cost is around 8.25 and, with this, I think further rate reductions are unlikely, given the views that interest rates may go up. So probably we have reached the bottom level in terms of the interest rate reductions.
Okay. And these Muthoot gold bonds that we show in the presentation, are they the legacy ones which have been borrowed at higher rate?
Yeah. Not necessarily at higher rate, and so at that time we were also doing public issue of debentures also. Those rates also sometimes maybe carrying a slightly higher rate. So if you the Muthoot gold bonds are the ones which we are purely raising it through branches under the earlier regulation of private placement.
Okay. Got it. But not a meaningful cost of fund reduction going ahead.
Yeah, given the likelihood of increase in interest rates, we are to take a view in terms of how far it can go down.
Sure. All right. Yeah. Thank you.
Thank you. The next question is from Parag Jariwala from White Oak Capital. Please go ahead.
Thank you. Thank you, sir, for the detailed explanation on NPLs. My question is that, sir, you have just highlighted that you are trying to venture into personal loan and vehicle loans. You said that the numbers could start coming in from second and third quarter. Basically, if you can, elaborate a bit more, I mean, where exactly are you planning to have a separate subsidiary, or it will be in the parent book itself? What are the timelines on hiring? And any further detail on this would be very helpful.
I think we'll be able to give you more on that in the next 2 quarters. So we're just thinking about it only.
Okay, but is it fair to see? Is it fair to assume that you will see some bit of loan book in this year itself?
Yeah, certainly.
Okay. And secondly, my question is on the 2 subsidiaries. I think both are at a leverage of 7x right now, and that's a fair leverage at least for the microfinance business. So is there any plan to infuse further capital into both the subsidiaries, micro and housing both?
Certainly, as and when capital is required, we will keep the leverage at 6-7 times, etc. And whatever capital is required for growth, whether it is in the home finance or in the microfinance, certainly we will be doing it.
Sure. And in terms of borrowing, what rate we are borrowing right now on an average?
Which company?
Parent book. I mean, gold financing.
I think mostly it is at MCLR or near about MCLR level. The average cost of borrowing for this quarter was 8.25.
Okay. And average on book is? I mean, the borrowings which we already have?
That's the average.
That's the average, which I mentioned. I was not referring to the incremental. Incremental, I said that's mostly closer to the MCLR.
Okay. Even the bond book, even the incremental bond borrowing, is it closer to NCL?
So the recent one we did at average cost about 8.4% on a monthly basis.
Okay. So, technically our overall cost of funds should go up a bit.
See, right now it is a bit of a churn, as everyone knows. So, there is a lot of discussion about interest rates going up. So, that's why I'm not able to give a view on that.
Okay. Okay. Thank you and best of luck.
Thank you. The next question is from the line of Bhavin Shah from Sameeksha Capital. Please go ahead.
Yes, thank you. If you look at and I think this question was asked earlier, but I want to approach it differently. If you look at the overall credit growth versus what we achieved in gold loan last year, obviously we were below the market. And I'm trying to understand if there is a shift happening because there is a plethora of options available for, there's a, proliferation of financial institutions and various options available for people to borrow money. So is that playing any role, in our affecting our growth? Because I think also if you look at the data on the rural economy, and I think from a variety of sectors there has been a strong consumption-related data point. And I think while you have mentioned that we started to experience recovery in March, month of March, and continued this quarter, it was not visible, here. So do you comment on this?
Actually, we did not fully understand your question. If it is about the growth and why we are saying about the growth, why we feel positive about the growth, is one or two things. We have put in these so good marketing efforts, and we also see some extra growth coming in the last March, April, and till May. That is what is giving us some confidence that we will be able to reach the 15%. That is what you asked. Actually, we didn't really quite understand your question. That was it. This is the answer.
Okay. My question was that last year we grew below the overall growth in the credit, credit growth in the economy. And, why is that? If you can comment on that.
Yeah, last year we were not able to grow, so actually we are optimistic of this year. Nothing more. What can I say more than that?
Okay. And as far as the recovery for the NPA, because this is jewelry and it is secondary sales, you were earlier mentioned the cost of auction cost is very, very insignificant. But what about the discount that is given to attract the buyer? Is there, compared to the value that you have attributed, on an average basis, what percentage of value do you recover?
See, we told you when we need to auction it only in the cases where people are really not interested in taking it. So whatever NPA you see, 90% of it, people will take it themselves. Only a smaller percentage needs to be auctioned. And that, the discount or whatever they ask a reduction for the jeweler who purchases will definitely be based on the quality or his impression about that particular jewelry, etc. So, as we said earlier, as far as we are concerned, we wouldn't lose any capital principal, or we would recover majority or maybe 80 to 90% of our full interest in all these cases. So we are not at all concerned with that any loss which we think can happen. It doesn't actually happen.
So to the extent that you recover 80 to 90% of the interest, that interest is recognized only when you do the auction and you have the recovery, correct?
Because as an NPA, we do not recognize any interest. Once it is classified as NPA, there is no interest at all. All the interest which we had, if we had booked earlier, is also reversed.
Okay. And on the microfinance business, could you comment on what sort of risk control you have in place, to prevent any problems that other companies who have expanded aggressively in microfinances have faced?
See, our microfinance, our Chief General Manager, who is also on the board of the microfinance company, Mr. K.R. Bijiman.
Okay, we have our microfinance, which majority of the portfolio is in the SHG model. That's one difference from most of the other players. The SHG actually, they do a little bit of initial work to educate these customers and hand-holding before the money is lent. I think that is one factor which has differentiated Belstar Finance from other microfinance companies who had suffered a loss in this setback. Maybe they are a little more closer to the customers, and even though one installment defaulted, they are able to get them back into the track. That's what I have seen. There was slightly higher NPA in the previous quarter, even they were able to bring it down substantially. So that's one difference. The second one, they are little concentrated in Tamil Nadu. I think the states where more problem had happened was Maharashtra and Karnataka. They were little away from those places also. That was also one safeguard. Those two factors were helping Belstar. But they have again, we have a good control monitoring, and they have a audit team. All those things are there, which is better than other microfinance companies. That's what is the differentiator of Belstar.
Okay, thank you.
Yeah, their gross NPA is something like 0.76 for the financial year 18, and the net NPA is 0.03.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Ashish Kumar from Infinity Alternatives. Please go ahead.
Thank you, sir, for taking my question. I had 2 questions. One was in relation to your growth. So, if I understand correctly, what you are guiding for 50 to 60% growth for all your subsidiaries and a 15% growth for your gold loan book. So, if I combine the 2 of them and if you were to hit your target, that would mean a 20% growth in consolidated book. Is that correct?
Yeah, sure.
Okay, and the second question was in relation to the last year. Given the fact that we gave more time to investors, to our clients to redeem their jewelry, how much is the additional interest income in your estimate that we may have booked because of this additional time which you would have given, which is, let's say, more than the ordinary? Is there some estimate which you can help us understand the numbers a little bit better?
We have not put any numbers to it, but I'm sure it is definitely substantial. Most important, as I said earlier, I do not know whether you listened to that, is that customers feel, or our customers feel, that Muthoot Finance is a much more customer-friendly company with regard to their gold and loans. That is why Muthoot is having more than 3 times the business of the next competitor. That's because people feel that they should come to us. All the others have almost the same number of branches. So we have not put it in rupees and paisa of how much of benefit we have got. But actually you can see from our performance also that our profit, our income definitely this is something which we are different from other companies, and we only benefited from this till now.
Sure, sir. No, I understand that. I'm just trying to budget in what is our normalized profits because of the headwind that we had in terms of reporting additional. Because obviously, should we assume that the 6% plus ROA that we have got for the last 3 quarters, can that be maintained going forward over the next FY18, FY19 and 20?
I think Mr. Uman will answer that.
I think we were guiding about 3.5% return on asset for a medium term or a maybe slightly longer term time frame. Probably 3.5 we can revise it to maybe 4%. But 6% on a longer time frame, we doubt we should commit that to investors.
Okay, the gap between 6 and 4 is very high.
Yeah. So we are also not sure, no? Should we give that kind of a highly optimistic number?
Yeah, but obviously if...
So that's why we are giving a number of 4.
Okay.
Umar is a very conservative person.
Yeah, I know it is. So the challenge is that from a modeling perspective, it becomes difficult if you have factor in 4% going forward.
Yeah, that's why, for your modeling purpose, 4 would be a right number.
Yeah, but then we would see a degrowth next year.
Okay.
So at the end of the year, we'll do something and see that we reach better percentages.
Okay. Thanks.
Thank you. Next question is from the line of Christine Rowley from Sloan Robinson.
Yeah, I guess I'd like to pick up on the comments from the previous questioner. So it is a valid concern because if the company was over-earning in terms of ROA in the last fiscal, and we need to start to fade that down in the next couple of fiscals, the change from a 6% ROA to a 4% ROA business would cause degrowth in net profit. Either the company is going to benefit from some scale efficiencies and, we're going to see OPEX to assets drop, or credit costs will remain, very low, or the company won't need to set aside so much in provisioning. But it is a kind of valid concern, and I appreciate that 4% is a conservative guidance, but it's also important to be realistic. Otherwise, we, as investors, it becomes very difficult to project the outlook for the company's earnings into the midterm. And it would be helpful to get a little bit more comment from you on that. I appreciate that we can regard 4% as perhaps a floor on ROA, given the scale of the business. But, the upside above that, there's quite a big gap between 4 and 6.
Christine, there are several variables, because these are all short-term loans, interest rates, there can be reductions, there can be increase, depending on the business requirement, we keep tweaking with these rates. So, interest rates can, cost of funds can go up. So there are multiple variables. So, earlier we used to give a guidance of 3%, then subsequently we revised to 3.5%. Now, we are looking at 4%. So though in the short term, we might be continuing with these rates, but, that's why we are giving, the current, ROAs may continue, plus or minus certain level. But on a medium term, I think we should not guide the market for a 6% ROA. So that's the reason why we are giving a guidance of 4%. For a medium term. It's not about 1 year. It's not about 1 year, probably 2 years kind of a framework.
And I guess the ROA on the housing finance business is lower than it is for the gold lending business. So, we should expect as the mix changes the ROA to come down.
So housing finance ROA is better, but just one thing, they are the initial stages of stabilizing their business. Right now, the focus is on building the portfolio. They have done extremely well, and they are at to stabilize in terms of their borrowing cost and all. So once they do that, I think definitely their return assets as well as equity should improve.
Okay. Could I ask just a slightly different question, just in terms of the competitive dynamics? We've obviously seen the unfortunate developments within PNB, both in terms of the fraud and in terms of their asset quality problems that they've been facing. And you've been very clear to highlight that the asset quality issues within Muthoot are different to a bank. But I did want to understand whether what's happening within the public sector banks is having any impact on the market competitive dynamics in your area.
No, so our loans, the average ticket size is about 40,000, and typical portfolio is between 50,000 to maybe about 1.5 lakhs. So probably what are the issues which are the public sector banks are facing is more with respect to the larger ticket size loans, or more maybe the corporate loans of that sort. So we don't feel that those issues are having issues with our company or our NPA portfolio. As we explained in detail earlier, our NPA portfolio is totally different from. It's only a question of timing issue. We have fixed certain time, especially the 6-month scheme, which is constituting a major portion of the NPA. Because about 728 crores out of 2,000 crores is coming as an NPA. So there, the NPA it became NPA at the end of 9 months, whereas in a normal case, NPA falls at the end of 15 months. So it's only a issue with respect to the timing. And we give some relaxation to the borrowers. All these borrowers are going to repay. So our NPAs are totally different. It has no connection to the lending issues at of the public sector banks.
I understand that, and thank you for that helpful clarification, but it wasn't really on the NPA side that I was questioning. I was more thinking about what it means operationally for these banks. If some of them are under PCA or at risk of being PCA, which means that they may not be able to grow their loans as quickly, perhaps also capital constrained, does that have an impact on the competitive dynamics in terms of them, their competition for you in terms of gathering loans?
I would like to add that. Actually, as I would say rightly, the NPA in a gold loan book is actually, investors should take it as a sign of customer service. That's because it's actually time extended, little bit time extended, so that you can recover more interest along with the principal. Actually, an NPA in a gold loan company is a sign of customer service. On the second point, the PCA, etc., I think maybe some of the banks stops lending on even gold loan. We may be able to get into that segment, and I'm sure that it's for Muthoot or for an NBFC, it's a good thing.
Are you experiencing that in the market? Is it having any impact that you're seeing on the ground? Or is it, are they not? I appreciate that their lending rate tends to be lower, and they seem to do kind of ordinary loans with gold as a security rather than a traditional gold lending against a household ornament. But I just wanted to understand whether the issues that these other banks are facing is affecting their activity on the ground, which gives you guys an opportunity to grow faster because they're distracted or constrained.
You're right. Theoretically, yes. But practically, we have not really seen some big impact. So theoretically, it is fine. They will be distracted with so many other things. They may not be able to look at these. Right. But we have not seen any significant change because of that. But certainly, going forward, probably we can sense, we can smell an opportunity there.
I guess it might show up in your gold loans for business. The kind of slightly larger loan size might be the area where you would see the impact.
Yes.
Okay. All right. Thank you very much for answering that question.
Thank you very much. Due to time constraints, we'll take that as the last question. I would now like to hand the conference back to Mr. Digantarya for closing comments.
Thanks everyone for taking out time and joining the call. Have a great evening, everyone. Thank you.